What's the difference and what do these mean?
There's in the Finance Act that was brought on board by the Minister of Finance, Treasury, was a shift from turnover tax to presumptive tax. Very many, okay, turnover tax gives you where you know if you reach a certain amount of money in your turnover, 500,000, then you pay X amount of money, which is a consistent amount of money. It enables, it eases the whole processes of calculation of taxes, doing tax computation.
If you cross that threshold and they say then the tax is 3%, then you're paying 3% of 500,000 as your tax for the year period. Right?
Yes. But you see, one of the major challenges that we have is that most people are very risk averse when it comes to matters tax. They don't know anything, and they generally don't even want to know. They don't want to deal with KRA. So there has to be a bit more sensitization of the people in the grassroots level to help them understand what was turnover tax in the first place. What's the difference between turnover tax and the new introduction of the presumptive tax? How does it relate to the VAT I already pay by the 20th of every month? And considering there are people who, if you pay them, let me give an example. When Standard Group gives me a check, they'll give me the check already cut with withholding tax. And some other places, like if I do business with government or some entities, the money will come already deducted VAT. So there's a lot more that KRA has to do. And persons like us are available to support them in training the masses out there on what these different kinds of taxes would be.
And especially because it keeps changing in such drastic fashion year on year.
As you said, every year there is a new Finance Act, and the Finance Act is able to give new directions on how taxation will be. And this may be drastic sometimes, like in this particular budget, had very many drastic measures on taxation that affects how you've been doing. So actually, when you're looking for a tax consultant, look for someone who is well abreast with how it is, because tax this year is different from how it was last year. So you need to get someone who always understands and keeps abreast with the ongoings of the tax matters.
Let's talk about people who have more than one income. Say, for example, you work at the Standard Group as a reporter. On the side, you have this small consultancy where you talk to kids in school, you mentor people, you're doing events, you're emceeing, that sort of thing. So you have a separate income. They pay you 20, 50, 30,000 shillings on the side. And then you own some shares at the NSE, so maybe Safaricom paid you your 600 shillings in dividends this year. And then you have a small farm in the middle of nowhere milking 3 or 4 cows. So this is all income. How do you get that onto one statement? Because it's really difficult. Or should then the answer simply be seek out a qualified accountant to help you with that?
First is no. Even before seeking out a qualified accountant, you need to know why you're seeking this guy out. So the first thing is know that our tax is calculated based on total amount of income. So yes, you're employed, and if you're employed, it means you're paying pay as you earn. What is deducted at the end of the month, and it's paid directly by your employer. But in your, like now when the guys are doing their returns, I would advise this guy who is a reporter and has all this other income, he'll be able to put on both this other income in his tax return form. And it will be able to categorize the different kinds of income. Some of that income, like what you've said, already has been taxed, because let's say he has gotten some income from shares, there might be some capital gains tax that has already been deducted. So when his accountant is calculating the taxes, he'll be able to know that some of this income is direct income that has not been taxed at all, like the farm that he has and is milking some cows. So that income has not been taxed. So that one will be piled up on the already non-taxed income. Yes. Then there is the income that has already been taxed.
Yes.
Let's say he's been paid consultancy fees.
Yes.
And consultancy fees
5%.
Has the 5% withholding tax. So the accountant is able to distinguish the different kinds, and out of the return, there's something called a tax computation, where you'll be able to compute and see your tax liability.
Now, excellent. Last question. The fact that for a lot of people, when you do your tax computation, then it would seem that KRA might owe you some money, rather than owing them tax. The figure reads the other way, that these guys owe you some 20,000 shillings.
Yes.
So how do you go claiming that?
We call that having a tax credit.
Yes.
So in the event that you have a tax credit, KRA uses the principle of the fact that you're a going concern.
Yes.
It means that next year you utakuja tu.
Yes.
So if it is not very material, it is expensive and cumbersome for you to claim it.
Yes.
But KRA actually should be able to give you the money within 60 days. There's been heavy complaints, especially on VAT refundable, on that KRA has been holding for people.
Yes.
But KRA has been trying over the years to try and reduce the amount of time. But what now, from a practice perspective, people fear claiming that money, because when you claim that money, it means you're inviting them to audit you.
Yes.
And people generally don't want KRA in their spaces. Yeah. So, but if you're keeping proper taxes, if you're keeping proper records, you've been doing due diligence with respect to how you manage your business on a day-to-day basis, then KRA has no problem refunding you. Yeah. One thing that I want to say is that doing tax returns does not necessarily mean
paying a tax. Yes.
You only pay if you are in the payable threshold, or you have, for a business, tax is paid on profit.
Yes.
It's not paid on income.
On turnover,
it's not paid on turnover, it's paid on profit. If you already paid pay as you earn, then and you have other income, that's the only income that you will add. And if it's a loss, it does not necessarily mean that you will pay. Now, the last thing that I'll say as we close is that in the event that you don't file those returns, iTax will automatically generate a tax invoice.
Yes.
And from the practice of the people who I've seen we are working with right now, we are seeing that the system is charging 20,000.
If you don't pay your tax.
If you don't pay your tax. Automatically.
Yes.
Actually, on the fall of midnight 1st of June, 1st of July,
they send out the invoice.
An invoice, and you'll get what is called a defaulter, a defaulter alert, and the 2%, which has a 2% compound interest per month,
which is a lot of money.
Well, so if you stay long, it will become some humongous amount of money.
Wow, quite an eye-opener there for people out there who are yet to file their taxes. I know a lot of them are sitting out there listening to us, and to urge them to get going and try and sort themselves out. But indeed, thank you very much for your
insights.
Always a pleasure. Well, on that note around taxation, we want to bring it to a close, but remind you indeed that just 10 days left on the clock to go out and complete filing your tax returns. You don't want to get hit with the 20,000 fine and the compounded 2% per month. But from us here, well, it is Kwaheria Kuonana. That's it for KTN Business today. Today we'll be back at the same time again tomorrow with more from the world of business. Up next in just a few minutes, be your KTN. But from us, see you until next time.